Hi, Warriors. US dollar yen extends gains from 142. How you doing, Mike? Ryan? Ingmar, AJ, Blake, Kman, Giannis, welcome. And Steve. Okay. So I'm going to go to Ryan and say, Ryan, why don't you give us a rundown on the BOJ, how you played it, all of that important stuff. So,
Morning,
nice
mate.
follow through. Good morning to you.
Yeah.
146 is looking not as aggressive anymore, is it?
No, but we've got to get through this 145 first.
Yeah.
I've been making the case all week, missed it twice. That 142 level signals a potentially very strong bottom is in place, especially now we've broken it up through the 144. So yeah, we still got a lot of stuff to go under the bridge with US data and whatnot, but
Yeah.
I think we might have turned the corner, at least as far as general dollar bearishness goes. It's going to take something more to get us heading that way. So I'm more of a dip buyer in this one than a rally seller, as per the months previously.
Okay. And
The BOJ.
was there a peace deal in Ukraine? Is that why the
No,
metals are?
they signed this
Oh, the
minerals
mineral
deal,
deal?
yeah, whatever it's going to be.
Okay.
Yeah,
Because
but the BOJ was, well, they were very, very cautious. It was almost like a complete climb down in what we were expecting, at least, to maintain some hawkishness, but very downbeat over what this trade stuff might bring. Hence another reason why dollar yen's rallied.
okay.
But yeah, he threw out some crumbs at the end that they're still on their path, and the outlook is still possible, but it's all in the air due to the trade stuff, like every other central bank. So doesn't look like we're getting a hike anytime soon. Thought
Okay.
if they didn't hike at this one, the next one might be a possibility, but no, that's all up in the air now.
Well, I was talking about the potential for a 3 drive in USD CAD, and that's what happened. I mean, you have the buy signal on the first blue candle. Okay. So on the 3rd drive, you wait. That's not a signal because it's red, even though, it cleaned out all the stops and the inside candle. But this was stops under the low. So this looks like it could be turning the corner, maybe get a rally towards 140-ish. Um, any thoughts on Loonie? I know.
Yeah, well, this one's been strengthening, or the Loonie's been strengthening, because of the pressures off regarding tariffs. Carney said after his election, or Trump said that him and Carney are going to have a chat, so that leads to further stuff.
Yeah.
But again, I think we might be heading lower. Just that price action shows the break of 138, a new low. It just shows that the pressure's still on. You compare this to oil and you think, what the hell's going on? Oil's down and dollar CAD's down. So you can tell what we're trading in this one. But I think maybe a little shove lower before we might start turning around. I don't think we're done with the downside.
Okay. Well, I mean, the last confirmed low was back here. That's what, the 3rd of April. So for a
Yeah.
month we've been diverging. It's a pretty good reading for a new low, 36. I wouldn't look for a lot of downside with this kind of
No.
this type of glaring divergence. Just the way it looks to me. Um, I want to
Yeah.
go to. Go
Sorry, mate.
ahead.
I
No,
was going
it's
to say, I
okay.
think if we're down in the 136s, I've got a bit of a big level around 136.50. If we're down there, I think that might be sort of enough's enough for any more downside move.
Okay. I wanted to go to Kman on this.
Morning, Dale. Morning,
Good
everybody.
morning. Good morning, Kay. I read an article, something about that the Treasury percent said that they were going to be buying, the Treasury was going to be buying
Bonds.
U.S. bonds.
Yeah, but So
Do you
this
know
is
what that's
something
about? What's
that's
that about?
something that's been put in place from 2024 already. Yeah, it's
Huh.
been going for
Okay.
nearly a year. No, but yeah. The funny thing was that he said that it's working really well. They're when they need to or when they want to do small buybacks. But then the funny thing in those lines that I was reading them last night is that he says, so we need to improve, we need to look for different ways to do this, but I like the system because it allows us to get the best price possible or for the funding for the American people. But if you read through the lines, knowing where he comes from, his background, being a
Hedge fund guy.
fund or asset manager trader,
Yeah.
can be forgiven for thinking that Treasury and the Fed will now be active bond market participants and a kind of second Swiss National Bank. Just let's trade it around a little bit. And obviously, it is meant at avoiding shocks, so that is
Yeah.
something that would allow to step into to um, smoothen violent bond drops. But no, I think it leaves the door open to a bit of trading from their side, which of course is going to be allowed under your current president.
Okay. Just a quick look at TLT if I didn't know what this instrument was, and I just looked at the chart.
Mm.
Straight line impulsive moved down, and we got to 61.8, almost missed it by 10 points, and then rejected pretty good. So, but it's hard to be bearish bonds when the 10-year looks like it's going to keep dropping.
Uh,
It's called a bull steepener. Can you define the difference between a bull and bear steepener for
uh,
our audience?
yeah, I think the bear steepener is when the 2 years are is that when the 2 years are dropping
Yeah,
slower than the 10 years? Well, it's one or the other. I'm not really using those terms too much. I must admit myself.
yeah,
Um, no, I think the overall picture is kind of what I said that may happen. You have the bond sell-off, but then we are looking at growth and potential um, turnaround or slowing down in the jobs market, and that's when growth and economic risks are taking over. Um, of course, we can have headlines on the tariff front and things which are going to throw it around as well, and then people will be looking at what it means for inflation and things. But yeah, we are just below mine neutral on the 10 years. We could go down to 385, 390, but then I think we'll have to just look at it again. And I think we're still in a big range around that 410, 420 neutral on the 10 years right now.
okay, so gold kind of
Yeah,
had that sideways pattern. We're headed towards the number we were talking about
we're
earlier in the
heading
week, right?
there.
And that's
Yeah, we're
something?
heading there. Your little circle there. We're
Yeah,
heading there. Especially also with China being off. So you eliminate you take away a natural buyer
buyer. Yeah.
right now. So I think there is potential that we are going to go and visit that level. That is a possibility. Also, with like, but I want to be extremely cautious. But Besant and Trump talking about China, the Chinese. Still saying you have to pick up the phone first, but they are not completely against the deal because they are not stupid either. So, I mean, extremely cautious positive lines perhaps. So that takes away the hedging need in gold. But then I'm a little surprised that silver is going down as fast as it is, or as fast as gold. I thought there may be a case for silver holding up just that little better. Um, Yesterday we
Well, it's
saw,
early. It's early.
yeah, it's early,
I,
and I also think, there what I said. I mean, for the first 3 weeks of April, we have been trading a certain way in everything, and it was probably there was a need for rebalancing the books at the end of the month. We saw that bonds were doing it, equities were doing it, and metals were no exception. So I think there's quite a bit of month end still or rebalancing in there, and then you take away the natural buyers, and that's what you get right now.
Okay, this goes out to the three of you guys. New all-time highs coming in S&Ps, or is this
Tomorrow.
tomorrow?
Tomorrow.
It could
Tomorrow,
be.
I mean, where we all expect a lower print on the NFPs, they're going to print plus 450K and your S&P trade 6,500. No, I'm joking.
Yeah, no, but I mean, it's not that far away.
And it is not.
Not
If you
that
look at
far
the
away
volatility.
anymore. So what do you do? Is this a rally to short? If you were a bear or you got caught on this break and you thought, oh, it's just a 10% correction and it's going to go to new highs, and then we had Liberation Day. There's got to be some supply of people that got caught long into the crash that may be looking to, just recover and get out of the market. Let's see what happens up here.
Yeah.
We're already 61.8. We're right about there.
Mm.
And then this moving average comes in 760. I don't know. I favor selling this early next week, unless tomorrow turns into be
Yeah.
an inflection point. I would say
Mm.
that follows through. Um, but
Yeah.
this could have been it.
I
This,
expect tomorrow to be a big day, Dale.
yeah,
And I know we always expect stuff to happen, but usually I'm quite conservative, but
sanguine.
tomorrow I expected a big day because whatever's going to happen, the market expects a slowdown in the job market. So a negative number, but mildly negative, is going to be said like, oh, okay, it's not as bad as we may have feared. So you will have a move on bonds and equities and stuff. But if imagine that you really get an extremely crap number, then the
Yeah.
people who are expecting a slowdown will have those dogs will have that bone in their mouth, and they are not going to let it go. So there, I expect, on the contrary, the equity market to get a bit of a knock if it's really bad, really bad.
Okay. And I noticed this before on shorter term, but it's really clean on the daily. Here's drive one on the gold silver ratio, confirmed, right? Here's drive two on the gold silver ratio. That was, last week. Glaring, but over 70. And it looks incomplete. We could get one more high. And this happened under duress in the market. Okay. Both of these things happened when
Mhm.
there was risk off going on and people just wanted, I don't want to hold any silver with growth scares and things like that. So there could be one more shot up here. And I don't think that's bullish for risk. So just something else, a little clue that you can get from other markets that really screw you up.
No, yeah, no,
All the
you're
clues.
right, you're right,
The butler did it. No, I don't know. Anyway, it's a
you're
clue.
right, you're absolutely right.
So, boss, what are you thinking in S&Ps? I remember about a week ago you said, I'd be looking to start shorting them around 56. Have you changed? Have you started probing it?
Mm, damn it, Dale. I'm gonna have to just say that you guys might see a pattern in play for short S&Ps at current levels. I mean, you have to,
Okay.
right? I mean,
Yeah,
you have to
yeah,
you have to take the stand. You have to take your stance, right?
yeah,
I mean,
yeah,
but I was listening to you guys' conversation, Dale, and about overhead supply, right, Coach?
yep,
Overhead supply. I think we're right
yeah,
into it. We're right
yeah,
there. So,
yeah. Yeah, we're there. You know, there's supply up to your next green line at 780 too,
Yeah, this is
all the way up
50
there.
5780 is the upper end by the 200 DMA. It's
Yeah,
previous support. It's like I know we're
yeah,
into the resistance zone. Will it be today, tomorrow, past the jobs report?
yeah.
This is where you start staking your claim. When you trade, you have to take your stance
Probe.
and
You have
say,
to probe. You have to
yeah.
probe ideas that, 2 weeks ago, people would have been drooling to sell it up here.
Right. And so right now everybody's thinking, oh, we're having our next bull leg. Well,
You're right.
where were you back at 5,000 or
Yeah,
5,100 a week and a
yeah,
half ago?
yeah. You were there.
Well, yeah, but that's the problem with I saw this meme about gold. It was funny. It was like when gold was like when people would go up to like a counter and there'd be like one person at the counter trying to buy gold when it was at 2,500, and now that it's at
Oh,
3,200, you've got a rush of people that are trying to
yeah,
buy it up here. It's like that's the and we were just having this conversation in the chat room. All right, and I'll just take you guys over to the actually that's the general chat room. I can just do it over here. I'll just take you over to the general chat room and I'll just, Kman was like talking about the key levels and in gold. He says prior high, I'm going to keep an eye on it. Kman's obviously here.
yeah,
And I said, it's one of those moves that everyone's looking to buy the dip, but I feel it just could be dipping for a while as we work off lopsided positioning. I mean,
yeah.
we have everybody's bullish gold. That's not a
No,
secret.
they say it's the most crowded trade since Nvidia,
Well, there you go. Okay.
and that
And
was
so
pretty crowded.
that's pretty freaking crowded, right? So
Yeah,
everybody's going to be trying to buy this dip in gold. This, you could argue that, oh man, was that a blow off top? I don't think it was a capitulation really, but blow off top, I guess. Whatever. Now you're seeing the actual reversal. You're going to start getting people just saying, "Ooh, this is a good level. I'm going to buy it here," and then they're going to get stopped out. Then they're going to say, "I'm going to buy it here." Then they're going to get stopped out. Then they're going to buy it here. They're going to get stopped out, and then by the time we get down here, they're going to go, "Oh my God, it's reversing," and then that's
yeah.
probably the time you want to be
Then they'll
buying it.
get short.
Same
Yeah,
as shorts on the way up. This is the top. This is the top. This is the
Yeah,
top.
exactly.
Right,
Top.
and it's just
yeah.
same thing with the
I was one
dollar.
of those guys.
Well, wait. We can talk about the dollar too, because Dale, you've been talking about seeing a reversal in the dollar index. I mean, we pushed 100.08, which everybody should know. The 100.20 is major resistance. We've been putting it on the bias chart literally every day for the last 2 weeks. Is 100.20. We're basically there. I
Yeah,
mean, everybody's like, oh, the jobs report's going to be bad, or it could be bad. Like just what K-Man's saying, if there's a risk, and I think everybody believes that. We've been believing it for months. There's a risk. How about if the jobs report is, 110,000?
strong.
Yeah,
Yeah,
well, it's just like it's in line. We get these weekly unemployment claims at 220,000. We haven't moved off that needle forever. And how about if the jobs report's 110, 120,000 and people go, ooh, a sigh of relief, and then the dollar index does this inverted head and shoulder pattern. We start ripping, and then because everybody's selling the dollar, buying the euro because that's the right trade that the economist.
Jim said that positioning in the dollar is even more extreme than it was a month ago.
Yeah.
Of bearishness.
Yes, that was when I met with him last week. Dale, you're exactly right. I mean, everybody, the bearishness has flip flopped. It's crazy. He had
Yeah.
he had the COT data. I mean, we could pull up the COT. Actually, I'll pull up the COT data. I'll do it
Anyway, he
separately.
thinks this might be it. I'm thinking up and then one more low. But
I'm with you.
We'll see.
Yeah, I'm with you. I really, I mean, I know everybody here is licking their chops to sell the euro at 120, but how about if the 115 was it and we come back down to 110? And and going back to, I was just doing this with Chris Weston yesterday, last night on the trade-off show. I'm going to show you guys a chart that we were talking about last night. I have it. Shoot, you know what? I have it over here. Let's go over to the trade-off show because I have to do separate charts for that show, which are the Pepperstone charts since it's a Pepperstone show. This is how I see the euro. Like, you know, we got this head and shoulder pattern that's going to try to play out, and everybody's going to get short the euro when it breaks through 112.70 because you guys know that was the big multi-year breakout point, right? It's right here. This is the high from 2023. So everybody's going to get short the euro as if it breaks through there. Today's low was 112.86. So we came within 15 pips of that level. So we know it's a big level. It breaks. Everybody's going to get short the euro, and everybody's going to expect this move back down to like 110 because, you know, the measured move here will take us basically to 109.50. And we're going to stop short of that because what we're going to end up doing is pivoting off of this 18-year trend line that comes in at the 50% retracement. So we're going to end up stopping short because everybody's going to be head and shoulder pattern. Oh my God, it's a big reversal pattern. And you guys know it's the worst chart pattern on the face of the planet. So everybody's going to get short the euro. They're going to find themselves on the short side as it pivots off 111, blah, 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 because when it hits 111 and change, there's going to be some, you know, some bad news that rattles the dollar, and we just bounce off of there. The market's really efficient at pretty much screwing everybody in every different direction. And that's especially when you're talking about extreme positioning like this, the market is so efficient. And we've watched it for decades, the four of us that are here, about when the market gets too lopsided in one direction and too overweighted in one direction, they get screwed, and then you think it's reversing, then they get screwed again, because actually being short the dollar is probably the right trade over the course of the next few months. And like Dale said, we probably are going to end up seeing, you know, higher than this at some point. But if the tide is turned in the dollar, which I believe it has, like this is a major turn in the dollar, then these moves that are counter the dollar, and you see dollar strength where everybody starts to get bullish again because, oh, it's risk off and the dollar is a safe haven currency, it's probably going to be the place that you really want to be, you know, selling the dollar, you know, with a longer term view that we are heading towards, you know, 116, 118, but we might see 110 first or 111 first before it happens. I don't know. That's just my view on all this stuff. I think you got to be really, really careful, and you got to be flexible. I mean, I've gotten whipped around just like everybody else on some of these trades. I happen to be long the dollar right now, but it does happen. You know, it's messy.
Does.
Yeah. So RJP said talks with China are turning positive. Are they? Says who? Says who? I'm asking. Says who? Ryan, have you seen any positive China comments?
Very close to making progress with China, says F.A.C.E.
Well, okay. Says who?
That came out like just literally a couple of minutes ago.
Yeah, but how about China's side?
Yeah, zip.
They still looking for the phone. They lost their phones in China. They can't call. I mean, no. Trump has to pick up the phone because the Chinese lost all their phones. They can't call.
Yeah, I mean,
they won't call.
They're not calling.
Exactly.
I want to hear from some official channels. I mean, dude, clickbait is king here. And if anybody can report that there's a big China US deal, they're going to get clicks. Financial Times is getting all sorts of subscriptions right now. Believe me. And I agree with you, Kyle. I don't believe either side till pen hits the paper.
Yeah,
and
that's a good one.
And this is a big deal. And by the way, Kyle's a new veteran who was in Afghanistan, who's in our chat room now. Kyle, it's really nice to have you here. He's got a couple of young running around. Kyle, it's nice to have you in our chat rooms now. Anyway, I just want to say, though, we have to be really careful about what you're listening to and how you're trading it. I'm not saying that there aren't going to be good headlines. There aren't going to be things that really matter in the markets. But whether you're talking about, whether you're talking about Bloomberg whether you're talking about, you know, Financial Times, whatever you are looking at, be careful trading it. I think there's a lot of misinformation out there. There's a lot of clickbaity crap that's out there, and like I said, you just got to be a little bit more careful about, you know, everything that you read and hear. Just because you saw it on TikTok does not mean it's true. Wait a second. Unless you're my wife. Then if you're my wife, everything on TikTok is true. Everything. Speaking of which, I don't know. Did you guys see, Ryan, you posted something really interesting in our chat room a little bit earlier about container shipments that are sitting empty in California. I think that the supply chain issue is going to be a lot bigger than people realize. And it's not, don't worry about the toilet paper. You get toilet paper. It's going to be stuff like meds. It's going to be stuff like, you know, shortages of some electronics, maybe some toys. I think that's going to be a real issue. We're going to find out real quick here in the United States what we can and cannot live without from China. And I think that's going to be really, really apparent in the next couple of months, guys.
I think
Empty
you
shelves
missed the point of that tweet, Blake.
Empty shelves.
Well, I'm sorry. Both of you guys were talking at one time. Yes, empty shelves, maybe empty shelves. Dale, I believe for certain things, you know, and
Yeah.
and you know, a certain amount of products. Like I said, we're going to find out what we really can't live without, you know, from China. And I think a lot of, you know, cheap,
I can't live without
stuff.
my Simply watermelon juice. And I've noticed, Blake, already it's happening because, you know, sometimes I'll order groceries and the availability at even places like Target, they're not stock, they're running out of stock of things already.
Yeah, and that's going to get worse over the next couple of months. And Ryan, what were you saying earlier?
No, I think you missed the point of that tweet I put up. It was some woman standing with her phone complaining about all the ships she could see in the ocean out off the coast. None of them had containers on. They were all empty of containers. She was moaning about the lack of trade, except all those tankers she was pointing out were oil tankers. So you're not.
Oh,
Oh.
got it. Got it. But no, but that's for real though. I do think the supply chains, and Besson even mentioned it this morning in his interview, that it is going to be an issue. Stuff just doesn't appear like, you know, like Star Trek, you know, beam me up Scotty, and we just shit appears. You know, we are going to have supply chain issues. And you know, just speaking from experience, because my wife, you know, has, you guys know, she does a gift. She has a gifting company, but mostly local stuff. But you know, she gets orders in August for Christmas. I mean, that, you know, if you're ordering from China for the holidays, and Besant said, you know, hey, if you know these orders need to start going through pretty quick, or you know, we're going to have empty shelves come Christmas, and that's not a lie. That's really true statement. I mean, you know, those are things that I think, like I said, Americans are going to realize, you know, here in the coming months. Don't worry about the toilet paper. I think it's going to be a lot of the medical stuff that we need to be aware of. But anyway, that's neither here nor there right now. What's here and here right now is going to be the weekly unemployment claims, and we have ISM services data that's coming up here very shortly. So let me get prepared for that. As I do, Ryan, what are you thinking as far as what are you looking for today, as far as tradable ideas?
I'm probably going to end up chasing it, but I'm looking at dips in dollar yen on any further bad data from the US. Because as I say, you're talking about trend changes. We've had a big sell-off in the dollar. It's going to take something new to get it going another leg lower. The market said, okay, we've traded it, we've repriced it, all the bad news. For the dollar to go lower, something else has to happen. That's either a complete breakdown in all these trade deals or the data falling off a cliff, which to date, it still hasn't. Even the ADP yesterday, soggy number, but we know hiring is slowing. We're not seeing firing.
Yeah. So you want to chase the dollar yen higher, and I'll tell you, we're above the 38% retracement. We got this inverted head and shoulder pattern. The dollar looks pretty firm here, and we are challenging the underside of this broken channel that was, I mean, this channel been in existence since 2022. So we're like right at the underside. What do they call this deal? A throw under, I guess, if we go
You
the
could
opposite.
still call it throw over,
Yeah. So
even though it's under.
right.
It's
I mean,
throwing over the line.
or it's maybe
Yeah.
throwing up and over if you're short.
Yeah.
You know,
Yeah.
yeah. I mean,
Yeah.
you can be throwing up,
Throw
right?
it
So,
out.
oh shit, the data's out. Sorry, I came in. I didn't even get a chance to get to you. What do we got here?
Nothing, nothing much happening. I didn't even see them.
Yeah, I
There's
mean,
one.
maybe the guys and gals doing jobless claims forgot it's actually a holiday. Oh,
241,
241.
241.
There we go.
1.9 continuing, so a little tick up.
Yeah, nothing too alarming yet. No, I'm just I'm just still long across yen instead of dollar yen, but because I'm not sure about the dollar. I've said it before, so I'll probably leg out also of one of the or leg in to one of the dollar legs after tomorrow's NFPs. But until then, I think we're in a bit of a range for most of the currencies. But if I can take just 1 second, Dale, sorry, no, Blake, do you have the COT numbers for yen positions? Because I looked at the CFTC numbers, and in those numbers, although I hate to use them, they are showing the largest position long yen as far as I can see, going back 15, 16 years.
Pulling it up now.
I don't want to take any of Dale's interview time. Sorry about that.
Don't worry about it. But you're going to have to help me promote Mish.
You are the host right now. You are the host.
I can't find her.
Oh, let me see if she's around. I'll look for her, but yes, that is the highest right now. That is the highest spec
ever
positioning ever long.
And look at the short. That's a record too. The orange.
Yeah. Well, so that's commercials, but you can see this. This is hedge funds basically are short. They think that the dollar yen's breaking 140. They're you know, all the fast money, all the guys that you see on CNBC, they think that it's breaking 140. So
that's why I'm saying there may be a bit of adjustment to come.
Yeah. I mean, I don't disagree with you there. So if the dollar yen actually breaks out, Ryan's idea of maybe chasing it is not a bad idea. Let me look for Michelle, and let me see if I can find her. If you can say hello, Mish, if you're here.
She is. She's been trying to get her attention in the chat.
She has been. Oh, I am here. Oh, let me see. Okay.
She needs the link.
I still don't see her though. That's interesting. Did you already promote her?
No.
Shit, where is she? I need a link.
Oh.
No, but she's not in the attendees. Mish, if you can jump in as an attendee, then we can promote.
She says she needs the link.
I can see.
Can I try? Can I try?
I've just done it.
Oh,
okay.
Yeah.
You have to hit accept.
I saw that.
Oh, thank you, guys.
Oh, there she is. Here, I'll try it too.
There we go.
Yeah. Okay, I see her. That's why she was pushed up to the top. She's here.
I am. Good morning. I'm so
Good morning.
sorry. You know, usually I find the link easily to get in as a panelist, but for some reason I had to go in through the other channels. I didn't find the link, but here I am. So good morning.
Hello, Michelle. How are you?
I'm great. Hi, Blake and everybody.
Say hello.
Good morning. Have a great interview with Dale.
All right, listen. Thank you very much, Dream Team. All right.
Thanks, mate. Have a good one.
Nice work. And we'll wrap it up tomorrow with the NFP with you guys. So, Mish,
yes.
How's the Modern Family? I do recall we haven't talked in a while, but you know I started focusing on that XRT, that critical level you pointed out. I think it was 78, and the market once it took out 78, it was you know, kind of a Niagara Falls trade.
Exactly.
Do you think that led it? And is it a possibility that could be a leader if we turn?
Well, leader might be, at this point, we would just like to see the retail sector follow along. Obviously, yesterday was a pivotal day with the extraordinary earnings from Meta and Microsoft. And yet we've seen in the retail space some trouble, like if we're looking at restaurants, McDonald's really was terrible. Estee Lauder was not great. So it's, this is a situation right now where the consumer is the sector that let us down. Really, if you look back at January and you look at XRT, it was one of the first areas to break down under that 50-day moving average. Yep. So we kind of knew even before the tariffs became so blatant that the consumer was not necessarily buying into the bullishness that so many people came into this year with. And now, after it bottomed, the interesting thing was that if you're looking at a monthly moving average, it had broken down under the 23-month, of course, in the early part of the year, which is a 2-year business cycle showing contraction. But that's different than recession. Recession would be if it broke down under the 6 to 8 year business cycle or the 80-month moving average. It broke it like in an intraday situation on that April 9th, but it came right back when it held 64. So I was already saying to people, we don't see the typical signs of recession looking at the consumer. And of course, that's where you really have to look the most because it's holding up that long-term cycle. And the only time it's been down below it in a decade really has been during COVID. So I guess what we have to say right now, and you have a chart up there now, right? Is that it?
Yeah.
Okay.
What really grabbed my attention is, unlike most stocks at the April low, we diverged on the XRT.
Right.
And you could go to almost anything else, and that didn't happen. So we already have one divergence. If we had one more sell-off, we'd have our second and like a 3 drive. So I'm paying attention to this. I know some people always they're starting to adjust their volume because they're hearing me want to talk about buy. They're hearing me talk about wanting to buy things.
Well,
They're usually hearing me always want
to sell things. Yeah, well, we've been buying things for the last, well, since the April 9th low, because what's interesting about this pattern right here is that if you look at that April 9th low, the next day was an inside day. And then it closed above all of that the following day. So that to me is sort of a classic reversal pattern. Right. Yeah. So I started to feel a little bit more optimistic, number one. Number two is, like I said, it held that 64 after that initial flush. That's that 80-month moving average. And now, of course, with the rest of the market being happy today, after these earnings reports, we have to see it take out at least that 200-day moving average. And then if you look at a monthly chart, it would be the 23 months. So we're in that 70 to 72 level now is critical for XRT. So everything that we're buying, and we bought early, I'm a little bit hesitant to like start piling in right now because I think now your risk is not as controlled. But if we can get through that 70, 72, I'll have a lot more confidence. If we cannot get through and we start to roll down, I would probably be a little bit more cautious, or maybe a lot more cautious. Because I heard you guys talking before, there's still a lot of things we don't know. We don't know what's going to happen with supply chain. We don't know what's going to happen with tariffs. We saw the GDP, but of course, Percent already said, oh, that's...
We don't know nothing.
We know nothing, right?
I don't know nothing. That's right, what all my Italian friends' fathers said. Right. This is what you say anytime anyone asks you a question.
Exactly, except that what we do know is price. That's what we know. I mean, that's the key of a trader, right? Is to put the blinders on for the headlines and just watch the price action. So not only is retail's been lagging all along, and that's fine. This is a growth versus value market when it's bullish, and we've seen that forever. But, considering the fundamentals now, you have to watch that retail, you have to watch that consumer, and you have to watch transportation. So let's go to IYT, another key member of the family.
Good. Because IYT is probably going to have some issues with trade slowing down, right?
Well, it's already having issues because, there's issues with the whole trucking
Right.
situation. The ports are supposedly really slowed down. Deliveries aren't coming in from China. These are all really important things to the economy. And we know the market is not the economy, and we know that the market is forward thinking, but you still have to have a deduction of what could happen based on retail, transportation, and small caps. And look how much this is lagging. And we just saw XRT was close to that 50-day moving average. Is that the 50, the green one?
Yes.
No. Yes.
Yes.
And look how far this is. So,
and look at the momentum reading at the low compared to XRT, which was diverging the second time down here. This one's confirming. So
right.
Confirmed price and momentum is a much more negative signal than what you had going in XRT at the low. You could just see the difference, right? It's
Right.
glaring, the difference. So you
Right.
can't just buy the market. You know what that tells me? You really have to be a stock picker now. What do you
Absolutely.
think,
But
Mish?
there's a couple of other things that I think are really important that I would love to, basically share with your viewers is the
You want
question.
the screen?
No, I don't.
Oh, okay.
No.
All right.
Recession, stagflation, or worse, behind us, going into some period of optimism because there'll be economic growth. As I said, traditionally over the last few years, people have been very, very used to AI leading us through. Technology is the future. And of course, all of that is true. All of that is true. But we still have some issues even with the chips. So if we look at, before you even look at SMH, I just want to explain the narrative here. There are a few things that you have to watch right now to determine whether or not we're going into a recession, whether we're going to stay in sort of this stagflation, or whether we're going to go into some kind of period of growth or recession and inflation, although that looks the least likely right now. Number one is we've been watching the gold to silver ratio. That thing screamed a couple of weeks ago, got up to 105, 106. And then when that reversed, I thought silver would be a good buy. If we're going to actually avoid recession, silver should hold up. Against gold, it should start to outperform from the ratio standpoint. Gold has come off and silver has come off. So even though the ratio has narrowed, I'm still not certain that silver's got what it takes to do what it needs to do to prove to us that we're not going into some kind of recession. Let's face it, gold flight to safety, silver somewhat of a flight to safety, but really more an indication of industrial strength. And we know that's not great. That's number one. Number two is, like I just mentioned, XRT, IYT, they have to stay in the game. These are the things we want to look for whether or not we're going into recession. And then thirdly, I mean, really, we have to look at the bonds and not just the TLTs, but the TLT's performance against the SPY. And right now, the TLTs are underperforming the SPY, which is good. That's a risk-on situation. So the best we can say right now from the conclusion of these ratios and everything I just mentioned is we're still in a real economic slowdown. We haven't quite entered the recessionary zone. We're still more stagnating with some areas of inflation to be concerned about, particularly going forward in about 6 weeks from now when we see how supply chain is hit. And that's where we are. We're sort of stuck, which is why the Fed doesn't want to do anything. And of course, the dollar is a factor, but the fact that it's bouncing, maybe it gets over 100, maybe it goes to 103, 104. I don't think it's going to go much higher than that, but it's not collapsing. So all the and junk bonds are doing okay. All the classic signs we're seeing right now is we may have bottomed, but that doesn't necessarily mean anything yet as far as what happens over the next few weeks until we see what happens, like I said, with silver, with retail, with transportation, with small caps, with long bonds.
Okay, so what's your belief why Besant came out or Besant came out and talked about the Treasury going into the bond market? What are they worried about?
I've heard through sort of grapevines that they're all really long the bonds, by the way, that they're in their own personal portfolios. I mean, of course, that's the whole question of insider trading, but let's not go there.
That's interesting.
Yeah, that they actually are holding a lot of TLTs. I've also heard that Sam was holding a lot of China and foreign stock, but I don't know if that's true because he seems to be so anti-China when he speaks. But nonetheless, what they really want is a couple of things. We have a very high debt. People have stopped talking about that. Doge was unsuccessful, let's face it. Maybe it reduced it to a degree, but when you're talking billions, when we have something like 35 trillion,
Trillions.
it's
Yeah.
nothing. It's and then in terms of what's happening with the tariffs, they've brought in money also, but at what cost, right? So that hasn't really stopped the actual debt from expanding, or at least from going down. And so the TLTs, in order to pay back that debt, you have to have lower yields, otherwise it's too expensive. So they really are pushing for the lower yields so they can pay back the debt, and also so they can probably stimulate some more consumer spending, because with these high yields, people are nervous about spending more money. There's a lot of credit card debt. We see the housing market slow. So they're pushing the Fed to lower the rates. The good news is that low rates would be a relief to some areas, and maybe that would be the thing that would help the consumer. But on the bad news is that it would also signal to the market that the Fed is now nervous itself about recession because it's seeing declining labor. We have that big number tomorrow. The PCE is down, but it's not below 2%. That basically they're doing this because they're worried. And so that's the double-edged sword. And that's what makes, this puzzle, so many pieces, but we don't really know what the whole is yet. And that's why you say stock pickers market. Yeah, you got to look at things that are sort of outperforming a little bit here. And right now it seems to be, obviously we're back to growth here, but let's take a look at SMH before I say more about the growth stocks.
Okay.
Because that's also in my modern family.
Yeah, and I think that they could be the leaders. I was thinking we might get one more low, same reason, confirm low here, but
Now
I'm
this
sure
is
it's
a
going to
very
be up.
right. Now this is a
So
very interesting chart as well, right?
yeah,
Right. So now if you look at this, I think it's coming in right at 215, right? Right
that's
there.
right. Yeah,
So
about 4 higher.
So it's going to tickle the moving average.
Yeah.
208 was an extremely important level for the month of April to close above, and it did, because that's where the 23-month is. So while
Okay.
the consumer is contracting from a 2-year cycle, semiconductors tested it but held it. So we definitely still see that growth is outperforming value, which is great for the market. We just don't know if it's great for the economy. People say, oh, tech is the future, but is it going to create more jobs? I mean, can we all, everybody sit home and just, be on Facebook and use their NVIDIA chips in their Microsoft computers, and that's enough to keep them solvent? We don't know that yet. But the semiconductors still also have a lot of resistance, and they peaked out in July of 2024. So we're 8 months later. Was that it? I'd like to see it get back over 220, 230. Then I would start to feel that this is not just a knee-jerk one-day reaction because of the euphoria of the earnings.
Okay, so if you covered up the title of this chart right here, and you're looking at this rally, as a trader, wouldn't you be looking to sell this rally, that it might be a failing rally up here, and this wasn't it? I mean, I had these targets, but is it possible that we shake the tree one more time and take out this low by a shade, like 4,500, and then the big turn?
Very possible. Very possible. I mean, my original prediction coming into this year was that we would have a really shaky first half. And then as we got into June, July, we would recover and maybe wind up having the S&P close up on the year 3 to 4%. Minor. And I'm still going with that, because certainly we're seeing all the signs. So that would definitely meet the scenario that you're talking about. And this has been a sell rallies market. And so, yeah, but right now, exactly, I'll just repeat it because it's so important. Watch the XRT, the consumer, watch the IYT, watch the bond market, what the Fed's big announcement is going to be, watch the junk bonds, and then watch that gold and silver ratio, because if silver's crashing, not good. if gold is coming down against silver, much better. Silver
Yeah,
can
that's
go
happening
up.
today. That's
Right.
happening today.
Exactly.
So,
Yeah, look at the ratio right there. It's back under 100, but it's still
yeah,
pretty high. We want to see
yeah,
it really get below 96 before and then it starts
yeah,
getting
yeah.
interesting.
People would love to see the, we ever get back under 92, then you're talking a false breakout and more like 72. I've been telling people, it's not a complicated thing to do. It's not high risk, but take one of your gold coins and get 99 silver coins, 1 ounces.
Yeah, I mean,
And
I'm sorry,
go
go
ahead.
ahead, Dale.
No,
No,
that's
no.
okay. Because reverting back to the mean would be 60 or 50. And that would be a 40% move on just exchanging one coin for another.
Right. So that's also the other thing that's really interesting is if we look at 2022, which I can just explain it pretty easily, but if you want to go back to 2022, in 2022, in October, that was such an important month. Remember, that was the year where the Fed was aggressively raising rates and the market came off hard
Yeah,
after the whole
there it is.
post-COVID euphoria.
Yeah,
And in October 2022, the gold-silver ratio had peaked at that point, though, at 95, by the way, not nearly as high
yeah,
as right
right
now.
here. I'm showing it.
Right after it peaked, silver rallied,
Big.
gold calmed down, the bonds rallied through the TLT, and
Okay.
the SPY and the Qs, they bottomed, but they didn't really do anything for the next several months until the spring of 2023. That's when the market was finally convinced that the Fed was stopped and they were going on pause and everybody piled back in. So now here we are, 2025. We have the gold silver ratio peaked, looks like.
Right.
Silver hasn't
peaking.
really peaking, right? Silver hasn't really taken off yet. The bonds could be bottoming, certainly if it holds over 89 in TLTs, that's a good sign. And the SPY and the Qs are getting a bounce, but if it looks like 2022, they got a bounce, but they chopped for a while before they took off. And that's kind of the scenario you're describing, is that maybe we don't have a major sell-off, but we're not going to go straight up, in my opinion, right now. I think you have to sell the rallies, you have to watch the chop. And then when we get a clearer signal of what happens with tariffs, what happens with monetary policy, what happens with our debt, what happens with geopolitics, what happens with our supply chain, then I think when the market says, where the worst is really behind us and we don't have to worry about all that anymore, that's when you're going to start to see a better, as people love to say now, generational buy opportunity.
Okay, and that's, July. And that's when, if we don't have trade deals, we have just tariffs and no trade, right? 3 months from April, July.
Right, exactly.
So I think the market might be, not really ready to, be a moonshot until that is, we know what we have, and we may not even know then. But I just want to say, like, the XRT, that 77 level, there are a lot of people that, they're proud to say it now. Oh yeah, I'm not bullish equities. I'm in bonds. I stepped aside. No damage. Yeah, they're acting great. They've been moving sideways for 2.5 years. Rip Van Winkle put the trade on and then took a nap. I've never seen the bonds in such a large sideways pattern. And if we ever took out 85,
disaster.
88, yeah, 88. That's a good area. That 89 where it's at
89.
now, 88.
Right.
But under here, we have new lows coming in TLT. And what if that happens with short-term rates dropping, but the longer-term duration paper rates don't come down; they actually rise, while short-term rates are coming down.
Well, that would be be a sure sign of recession on the way.
Yeah.
And then again, you'd have to look at the relationship between the long bonds and the S&P. If they were both crashing, then it might be just a kind of a liquidity crunch. But
Okay, yeah.
if TLTs, if SPY is holding and TLTs crash, that would actually not be as bad. But if the SPY crashes at a faster velocity than the TLTs, that's your big recessionary sign. You know, by the
Okay.
way, as I'm talking to you, when I got on with you, silver was trading at like 31.89. Look what silver is doing right now.
Yeah,
I'm
bringing
looking at
it back.
your chart there, 32.35.
Yeah,
You
yeah.
know, all of a sudden gold held that 3,200. That was my bottom line area for support I wanted to see hold. And so right now, silver is, I don't know why I haven't watched the news. Obviously, I've been sitting here talking to you. Copper now is green. You know, this day, like I said, the initial euphoria of the fact that we had these massive earnings and not such bad guidance from a couple of these big companies in the Mag 7. Oh, by the way, let's put up mags. Let's, you know, this is a really another good piece of the puzzle in terms of where we're going, growth versus value, recession, stagflation, blah, blah, blah. Let's put up
Amazon. Amazon.
MAGS. Well, Amazon, right?
Oh, you.
MAGS. Yeah, let's put that
Okay.
because that represents the whole Mag 7. MAGS. I wrote a whole piece on this last night if people want to go find it on Twitter. And yes, I'm old school. I still call it Twitter just because I can't stand saying X.
Okay. Yeah, that looks pretty good.
Right. So this is, you know, this is where people are excited right now and starting to get very bullish. That Rubini, who is, you know, a very highly respected analyst, that they're right now super bullish. You know, but not necessarily, I don't follow anybody's opinion, but you can understand why. Inflation has come off in certain areas. My sugar indicator, sugar did not do very well. There was a big crop coming out of Brazil. The food prices are bottoming, but they haven't really gone up. Obviously, oil is crashing, which is good, and also potential in recessionary. Natural gas, by the way, would be something I'd keep my eye on. I'm really into the energy space right now, outside of all oil. I'm looking at, I've been in long uranium for a few weeks now. Might get into natural gas today. Also, still kind of watching the solar space. And even the EV space. This is where I'm looking, things that could avoid, and when I say EV, American EV, like Rivian, these are the areas that I think are interesting right now. Of course, you want to take a real sort of short-term viewpoint that when things roll over, get out. But I am not all that convinced about this Mag 7 yet, even though it looks pretty darn good. You're looking at Kamiko, right? I'm in actually URA, but that's a nice looking chart, right, Dale?
Yeah. Yeah, I'm watching uraniums. I like there's this royalty trust that I'm looking to buy cheaper if it happens. But
Right.
anyway,
So just to
you
sum it up, because I know I said a lot, and I really
a
want
lot,
to, yeah,
man.
I
You
want to.
could,
Yeah, I know I'm like an encyclopedia, but you know, this is my life, right? This is my life.
yeah.
I mean, I have
All
other
right.
parts of my life, but this is the major part of my life right now.
Okay.
Especially, I'm passionate about helping people because there's so much misinformation. And essentially, really, like I said, I'm just going to say it again. You've got to watch. If you want to put a number on it, XRT's got to get through 70, 72. If you want to put a number on it, IYT, transportation, has to hold 60 and really get through like 62, 63. If you want to look at IWM, which we haven't looked at, my good old granddad, that really has to get back over 200, 202. If they don't, I really don't care what the Mag 7 does on the basis of these earnings. They will look back and say, oh my God, when I say they, I mean the investors that go, maybe we need to take some profits here. And then you'll see the sellers maybe come out again. Watch the silver to gold. That silver has to hang in there. That would not be good. TLTs, like you said, 85, but also 95 over that would be
Yeah.
wow, really interesting. And watch the semiconductors. They just came off. They were at 215 when we talked. Look at them now, 211. So there's still cracks. And
Yeah.
so, don't, you know, be cautious. That's all. And if any of those things turn out to be really great, well, then we can change our mind. But for right now, sell rallies is probably still the thing.
What a great interview.
Oh, thank you, Dale. I
Really
always love
nice.
talking to you.
really came through with a lot of pearls. You know, I wrote that at the beginning of the week. There'd be enough pearls from our guests to string a necklace like June Cleaver had.
Yeah, well,
You remember June Cleaver?
I do.
All
And,
right.
we've been at this game for a very long time. I don't get ruffled very easily. I definitely, took a hit, a bit of a hit when everybody else did when I was caught by surprise, mainly because I was a little stubborn and I myself did not listen to my granny retail indicator flashing the warning. But
We
I've
all
come
do that.
yeah, I've come back from there and now I'm in the protect my profits and not want to lose more money mode until I see more clarity.
Yeah, smart. There's wisdom. And we'll wrap it. You know, you don't have to hunt for trades. They'll be so compelling, you won't be able to resist it. When
Exactly.
they'll come to you. So thanks, Michelle. I hope you have a great quarter. You and the team keep knocking the ball out of the park and hitting for a good average. Everyone follow Mish. Go to her website. There's a lot of great educational material that Mish provides. She has letters. They have webinars all the time. Really strong team, and it's really just three. It's Mish and her husband, and what's the other gentleman's name? I'm looking for.
Jeff Fish, he does
Yeah,
webinars all the time. He is
yeah.
a treasure trove of information.
So I mean,
Oh yeah,
all you
there's
have to
my
do,
go to
yeah,
market gauge, right? I
yeah,
write
go
a
to
blog
market.
pretty much every day. We have a weekend outlook that goes out where Keith does a video, Jeff does the content. We offer all of this to people without any cost. I'm on Substack now too, by the way. Yeah, it's probably not too late to read my outlook because it talks a lot about everything we just talked about now, and also the vanity trade, which we didn't get into.
Oh yeah,
Yeah, just I'm very, very communicative on X. If you go to
yeah. And
you have any
all I
ask
want to know is how do I stay away from this guy,
the snake.
the Yinwood snake? What a scary. Is that maybe algos looking for your stops right there?
Well, I mean, I don't want to get to, I know we have to end the interview, but I will just say this about the Yinwood snake. The last time we had it was in 1965. In fact, Blake and I had a whole interview on this a while ago, like I think in December. And so 1965, basically, as we got into 66, it was the peak of the market for years, right? I mean,
Okay,
it
yeah,
wasn't until 1982 that the market took off.
yeah,
So, we are coming into a fire cycle as we get into, if you like the Chinese astrology, which I love, we're getting into a fire cycle as we get into 2026. But right now, this is, what does the snake do? It coils, it strikes, it feels every vibration as it's on the ground. Think of these as great metaphors for what we're seeing right now.
yeah. Everything is, even the markets for life.
Right.
Anyway, thank you very much, Mish. Great talking to you, seeing you.
Thank you, Dale. Be well. And thank
All
you,
right.
everybody, for watching.
All right, Michelle Schneider, everyone followed her at Market Minute on X. And go to this website right here and learn. Pay to learn or pay the market. That's what I say. All right, that's a wrap, everyone. Don't just count your pips or whatever you're accumulating, count your blessings. You could join the team in 13 minutes, and we'll see everyone for the NFP. Big day tomorrow, huh, Mish? NFP?
Oh, yeah.
All right, man. We're ready. We've got it. We've got it cased. So that's a wrap, everyone. Adios, and thanks again, Michelle.
Thank you so much. Thank you, everyone.